Are you tired of watching your money sit idly in a savings account, earning next to nothing? Do you dream of financial freedom but feel overwhelmed by the complexities of investing? Well, I'm here to tell you that investing is not just for the wealthy or the Wall Street gurus. It's for everyone who wants to take control of their financial future. In this beginner's guide, we'll break down the fundamentals of investing in a clear, concise, and easy-to-understand way. Get ready to embark on your journey to financial empowerment. The age-old adage, "Don't put all your eggs in one basket," holds the key to mitigating risk in the investing world. Diversification is about spreading your investments across different asset classes, sectors, and geographical regions. Think of it as creating a safety net for your money. Let's say you invest all your money in a single stock, and that company faces unexpected challenges. Your entire investment could be at risk. However, if you diversify your portfolio, even if one investment underperforms, others may perform well, cushioning the impact. By diversifying, you create a resilient portfolio that can withstand market fluctuations. Consider investing in low-cost index funds or exchange-traded funds, ETFs, that track a broad market index, such as the S&P 500. These funds offer instant diversification by investing in hundreds of different stocks. Remember, diversification is your best defense against the unpredictable nature of the market. It's like having an insurance policy for your investments, providing peace of mind and a smoother path toward your financial goals. In the world of investing, knowledge is your most potent weapon against risk and uncertainty. Before you even think about parting with your hard-earned money, you must do your homework. Start by understanding the basics of different asset classes. What are stocks? How do bonds work? What are the risks and potential rewards associated with each investment? Next, delve into the specifics of the companies or funds you're considering investing in. Examine their financial statements, read analyst reports, and understand their business models. Think of research as your due diligence, your way of protecting yourself from potential pitfalls. Utilize reputable financial websites, read investment blogs, and follow financial news to stay informed about market trends and economic developments. By arming yourself with information and understanding, you'll be empowered to make sound investment decisions that align with your financial goals. Investing is not a set-it-and-forget-it endeavor. It's an ongoing process that requires your attention and engagement. Think of your investments as a garden that needs regular tending to thrive. Regular monitoring allows you to track the performance of your investments, identify potential problems early on, and make necessary adjustments to stay on course toward your financial goals. Establish a system for reviewing your portfolio regularly. It could be monthly, quarterly, or even annually, depending on your comfort level and the complexity of your investments. During these reviews, compare your portfolio's performance against relevant benchmarks. Are your investments keeping pace with the market or lagging behind? If so, it might be time to investigate why and consider making adjustments. Don't be afraid to rebalance your portfolio if needed. Over time, some investments may outperform others, disrupting your intended asset allocation. Rebalancing involves selling a portion of your winners and reinvesting those proceeds into your laggards, bringing your portfolio back to its target allocation. Monitoring your investments doesn't have to be a time-consuming chore. By monitoring regularly, you'll be better equipped to navigate market volatility, minimize risks, and stay on track toward your financial aspirations. Imagine embarking on a journey without a destination in mind. You might wander aimlessly, wasting time and resources without ever reaching your desired outcome. Investing without clear goals is like setting sail without a map or compass. Before you invest a single dollar, take the time to define your financial goals. What are you saving for? A down payment on a house? Your children's education? A comfortable retirement? Be specific. Once you've established your goals, prioritize them. Some goals, like saving for retirement, require a longer time horizon and a different investment approach than short-term goals like buying a new car. Write down your goals and the steps you need to take to achieve them. Having a written plan will keep you focused and motivated on your journey to financial success. Every investment you make should align with your overall financial plan and move you closer to your desired destination. In the world of investing, patience is not just a virtue, it's your secret weapon to building lasting wealth. It's about resisting the allure of quick riches and embracing the power of compounding over time. Imagine a snowball rolling down a hill. It starts small, but as it gathers more snow, it grows larger and gains momentum. Compounding works similarly. When you reinvest your earnings, those earnings generate their own earnings, creating a snowball effect that can lead to exponential growth over the long term. Think of the stock market as a roller coaster. There will be ups and downs, twists and turns along the way. However, over the long term, the market has historically trended upwards. Instead of trying to outsmart the market, focus on time in the market. The longer you stay invested, the more opportunity you have to ride out the inevitable fluctuations and benefit from long-term growth. Remember, investing is a marathon, not a sprint. By embracing a long-term investment strategy and staying the course, you'll be well positioned to weather market storms and achieve your financial aspirations. The world of finance is constantly evolving. New investment products emerge, market trends shift, and economic landscapes transform. To stay ahead of the curve and make informed investment decisions, you must commit to continuous learning. Think of financial education as an investment in yourself, one that pays dividends throughout your life. Make it a habit to stay informed about financial news and market trends. Read books, listen to podcasts, and attend webinars or seminars on investing. Don't be afraid to seek out knowledge from reputable sources. Remember, the more you learn about investing, the more confident and empowered you'll become in managing your finances. Think of financial education as an ongoing journey, not a destination. By committing to lifelong learning, you'll be better equipped to navigate the complexities of investing, adapt to new challenges, and achieve your financial goals. Congratulations on taking this crucial step towards financial empowerment. Remember, investing is a journey, not a race. Be patient, stay committed to your goals, and never stop learning. And don't forget to subscribe to the channel for more empowering financial content. Together, let's build a brighter financial future, one step at a time.